All right, welcome everyone. What would you think if the Fed came in and announced an emergency 50 basis point rate cut sometime before their next FOMC meeting, which happens to be on September 18th? Well, the word on the street is that they're going to be doing this, and I want to discuss exactly what this would mean for you and your money, as well as the economy, and how the markets would react, as they would definitely react, and it would be very volatile. So I want to give you all that information here in the video. Let's get into it and discuss what's going on. First off, thank you so much for liking and sharing this video with those buttons down below. I really do appreciate it. Also, do you know someone that may benefit from this information? If so, will you please make sure to share it with them? Again, with the share button down below. Thank you. I really appreciate you, and let's talk about it. All right, so just not that long ago, we had the last FOMC meeting where the Fed came out and they, yet again, kept rates unchanged. They did nothing with interest rates, and they kicked the ball out until middle of September, which is September 18th, when the next FOMC meeting happens to take place. However, remember as well, later this month, so as I film this video, we're kind of approaching mid-August as of right now, but we have Jackson Hole. That is coming up from the 22nd to the 24th. That is the meeting in Wyoming that they have each and every year, and that's coming up as well, which is also something we will need to watch very closely. But now that we've seen some of this volatility in the market so far this week, and we've seen some major sell-offs, we've seen some major buying pressure coming back in, and then sell-offs again, it's been crazy. Not only that, here in the United States, but global markets as well have been very, very volatile. Well, there's been a number of people coming out suggesting the Federal Reserve has a high likelihood of coming out and offering a 50 basis point rate cut sometime between now and their next FOMC meeting as an emergency cut to interest rates. Now, this sounds appealing, like, wow, that would be really, really good, right? Kind of depends how you look at it. The last time they came out and reduced rates prior to one of their FOMC meetings was back in 2020 during the COVID days, right? So what was going on then? Well, the economy was basically imploding. That was not a good situation. Everything was closing down. So that was not really, a good situation at that time, okay? Now, here's the thing. We might look at this at face value and think, oh, this would be a really good thing for all of us and our money and the economy and the markets and stuff like that if they came out and offered an emergency 50 basis point rate cut. We could look at it that way. However, I want to say this much as well. Okay, yeah, you're right. It might be good for our money, things like this, because it would overall lower interest rates and things like that, right, on any of these adjustable rates that you're paying on right now, like credit cards or lines of credit or home equity loans, things like this, that have adjustable interest rates, right? So yes, it would bring down these rates a little bit. However, do you think that this would be good for the overall economy? Do you think it'd be good for the markets? I'm going to say this much. Absolutely not whatsoever. It would not be a good thing whatsoever. And here's why. Let me preface all that and explain why. Do you think that this would instill confidence into investors and basically all of us that, the Federal Reserve needs to come out and offer an emergency rate cut just in the middle of the month and has nothing to do with their FOMC meetings every 6 weeks like they do? That would really, really spook a lot of people, investors included. A lot of people would be very, very concerned. And not only that, okay, so yeah, we'd be very concerned about this because it would think, okay, the Federal Reserve has obviously miscalculated. They obviously have not planned very well. They missed the mark on this thing. They waited too long, and now here they are, they're panicking, right? Would that instill confidence in anybody? I'm not sure about you, but I think a lot of people would definitely be very spooked by that and would lose a lot of confidence in the Fed yet again and say, I don't know if they even know what they're doing. Is there any competence there whatsoever, right? So this would not be necessarily a good thing. Even though we could look at it and say, oh, this would be great. It would finally lower rates. They've been sitting unchanged for however many months now, a long time. They've been sitting here unchanged at these very high levels between 5.25 and 5.5%. These are the highest levels that we've seen in, well over a decade. 12 years or 13 years, something like that. Actually, I think it's been more than that, like 20 years. Back in the Y2K time was the last time that we saw rates this low for this long, rates this high for this long, right? So it's been a very, very long time. And it's not very good for the economy overall. You've heard me say this before in other videos, right? It's very, very restrictive on the economy. When money is this expensive, nobody's borrowing money, right? We're all getting hit with high interest rates. If you're lucky enough to have any money saved in a savings account or a CD, well, then maybe you're doing kind of well because you're probably getting the 4.5%, maybe 5%, maybe 5.25%. something like that interest rate on your money, which is, it's pretty decent considering, well, where interest rates have been for the last several years. But this would overall not be a good thing. The volatility in the markets would be absolutely through the roof. If you think that we've seen some volatility as of lately, which we have, we've certainly seen a lot of volatility in the markets lately. But if you think this has been volatile, just think, if the Federal Reserve, if Jerome Powell came out tomorrow and said, hey, we know there's some volatility here, and we're going to go ahead and do an emergency rate cut of whatever percent. It literally doesn't matter. The consensus that I've been reading about is saying 50 basis points, which would be half a percentage point. Even if they came in and did an emergency cut of 25 basis points, a quarter of 1%, that's like nothing. That's as small as they go, by the way. That's like nothing. Even if they did anything like that, any type of emergency rate cut, it would instill a lot of fear and a lot of volatility into this market. There would be a lot of movement in these markets, a lot of down, a lot of up, and there'd just be a lot of price action, right? Which, by the way, if you're trading the markets, that's great. You need volatility if you're trading short term to make some money in this thing, but that's what kind of is going on here, okay? So if you've been reading the headlines, if you see anybody out there talking about this, saying that, oh, this would be a very good thing, it kind of depends where you sit. If you're looking for rates to be cut, then yeah, you're right. It would be a good thing. If you're looking for stability in the marketplace, no, this would not be a good thing. If you're looking for confidence, if you're looking for optimism in the Federal Reserve, if you're looking for competence in the Federal Reserve, this would not be a good thing. It would not instill any of those things in the Federal Reserve whatsoever, okay? So anyway, like I said, we've got a couple things coming up here relatively soon. We've got Jackson Hole coming up, again, the 22nd to the 24th, and that's a meeting that they hold every year in Wyoming, Jackson Hole, Wyoming, okay? And then middle of September, little over a month from right now as I film this video, I don't even know what the date is today, early-ish August, I'm not even sure what the date is today, but anyway, a little over a month from now, about a month, and I think it's about a month and about 10 days or so. Yeah, month and 10 days or so. We have the next Federal Reserve meeting. Okay, September 18th is when that one will be announced as well. So we'll have to continue watching what happens here going forward. But the consensus is this much as well. The Federal Reserve is most likely, there's like a very, very, very high chance and probability that they're going to cut rates with their next meeting in September. They kind of alluded to this with their last meeting here at the end of July, but there's a very high likelihood that's going to happen. But who knows? We don't know what's going to happen yet. Well, between now and then, we have we have two more inflation reports coming out between now and then. We also have another jobs report coming out in mid-September. We've got some economic data points that are coming out, and all that's going to play a role into what they do here. So this will be very important to watch, and I'll keep you posted on this. But I hope this helps you better understand the situation here and explain why this is maybe a good / a bad thing if they came out with some kind of emergency cut to rates. Make sense? Anyway, I hope this helps you. Please, as always, subscribe down below if you haven't done so. Share the video, like the video, check out the other videos here on the channel, the thousands in the video library, the ones I've hand-selected for you down below in the description or the top of the comment section, and right now popping up your screen as well. You'll see some videos there. Thanks, really appreciate it. Have a nice day. Take care, and I'll catch you again later.